All right, let's get right into it here. It seems like the market is finally breaking down here as this market has been riding this ascending ascending channel here, as you can see, since the early part of, or the mid part of the November. As you can see, this market's been riding this trend, this channel here, and for days and a week or so. As you can see, this market has been sustained and propped up by this rising uptrend support of that ascending triangle. You can see it, there's a micro term, short term, just continuously getting retested. More often than not, when the moving averages or pivots or support areas do get retested too many times in a narrow span of time, seeing this tight range gets retested over and over again for several times. You can see this is pretty much all throughout last 5 trading sessions here. This was today, this was yesterday twice, and then this was just last week. And then as you can see, it's just getting retested. So when you see a trend line, more often than not, when they get retested like this seemingly every single day, that means, generally speaking, it has a higher probability that it's gonna, a lot of times it's gonna break down. Especially the way the market came down. As you can see, we actually initially gapped up here, and I talked about the fact that when the gap does not get fully filled, it's gonna act as stronger resistance. As you can see here, the gap still remaining. Remember, this is where it closed on this day, that top of that candle body there, and then it gapped down. That down gap was not fully filled, you can see. So once the down gap wasn't fully filled, it acted as a much stronger resistance. And then once it got faded, it's sort of like the fear sort of came back in. But there was a little bit of that. You see, this was a first hour today, second hour. You see that third and fourth hour right here, right? So the bulls are relying on that, the ascending channel support once again, coinciding with the micro term and the short term moving averages. Again, the micro term and the short term, and that rising uptrend support, it's been getting tagged every single day, many times coupled throughout the session for each day. And finally, for the first time in about a month, we're breaking below this ascending channel support and breaking below. You can see my micro term and my short term moving average here. As you can see, that's a micro term, that's short term. We're just sort of slightly beneath the midterm state, and you can see my long term is also there. So that's going to be a potential level of support. If I zoom out here a little bit, as you can see, the midterm, this is the first time we're witnessing that midterm getting retested since early November, right? You can see that. And what happened was last time during October, when the midterm moving average was lost, you see right here, you can see it. You see that blue dotted moving average here, and that's the midterm. Quickly found support, but came right back down, hitting the resistance there. You can see the micro term, short term, and the midterm. You can see they're all sort of colliding, and you're seeing the crosses to the downside right here. And once we finally lost both the micro term, short term, and the midterm moving average, as you can see, and there were many attempts. You see these upper wicks, right? So throughout the day, you know, bulls are trying to reclaim that moving average, those moving averages. You see those upper wicks here. And then when it failed, market got into this downtrend for about 2 weeks straight. So this is sort of that similar pathway there. The bears are trying to get into here. Now that we've broken below the channel support, broken below the micro term and the short term, we're just right on the midterm here. So if we lose the midterm and the long term, there's a good chance, especially if my analog of 2010 is correct. If we're expecting about 4% decline, as I was saying earlier today, and that will put us about, as you can see, if we measure from the today's move, or somewhere in this vicinity, as you can see, that's about 4% move from since the gap down. That's exactly the 4% down move to fill this up gap.
You serious?
That was opened up in the middle of November there, and that's also the level precisely coinciding with my first level of fib, and that fib is measured from the recent swing high here to the low there, the November or the late October low. And then we also have to keep in mind that, you know what I'm saying, that is this a fake breakdown, right? Is this a head fake? Because you know that this market is capable of doing something like this before getting right back. So let's say if we see like a gap up, right, above, back above, that will be like, that has to happen very, very quickly, because the longer it stays underneath the micro term and the short term moving averages here, it's gonna weigh down and it's gonna continue to support the bearish case. So if bulls would have turned things around, and if this was some sort of a fake breakdown or head fake or some kind of a trap, you will see some crazy gap up above the micro term and short term, and then this thing rushing back up. If not, the longer it stays underneath the micro term and the short term, and then the rising up trends or the the ascending ascending channel support, the longer it stays underneath it, the more bearishness it's gonna get heavier and heavier, especially if we lose the midterm and the long term here, the moving averages there. So as you can see, if we lose the midterm and the long term, there are no real supports. I mean, you could kind of say, well, this low could be not really real support. The stronger support is not going to be until 446, because that 446 is the gapped up area. A lot of times this gap area is going to provide much better support. And then we also have the rising pivot coming from October swing high, and then the middle of November where buyers decided it's not going to deal with this resistance, right? You see that? That's what I like to call jumping over the fence, right? A lot of times bulls do not want to deal with strong resistance, and bears do the same, right? Bears don't want to deal with the strong support. They'll just gap it down. Bulls don't want to deal with the strong resistance. They'll gap it over. So this area of 446 and 440 is definitely the level of interest. Nobody knows if we're gonna actually bottom at 446. Again, that's coinciding with that rising pivot support there. And if that's the case, we're looking at about 3% decline from the recent swing high. But if we lose that and bears decided they want to completely fill the entirety of that up gap, and that's going to be 440, and that's about 4% decline. The oscillator's been whipsawing back and forth here for days. You can see we've been witnessing. So it's pretty useless for to kind of trying to rely on the oscillator for any kind of signal right now, on this, at least on the 65-minute chart. For a bigger time frame, I think it makes sense, like a daily and weekly. But for now, for the 65-minute chart, it's just been whipsawing too many times, as you can see here. So it's really not a good indications to trying to pinpoint where the low is going to be and things like that. But what I do see and what I've been talking about is that we do have bearish divergence here, right? So you got the lower high on that oscillator, while the price obviously have that higher highs here. So that also kind of add to this bearish argument, right? And for this to be completely neutralized and nullified, a bull's got a lot of work to do. Got to get above the micro term, short term within span of just a couple days, and then gotta go up and fill this down gap. But if that doesn't happen, if this turns out to be a legit down move, that what we witnessed this on the last hour, I do expect 446 here at minimum. And but again, we got the long term here, and would have to see how the market deal with that. We lose the midterm and long term in this vicinity. It looks like the bulls are really eyeing on that 446 level, and in that process, that oscillator might come all the way back down to the bottom of the stand.